Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you're all having an absolutely amazing day today. The cryptocurrency market has seen an absolutely explosive rally toward the upside, retesting the range high of the weekly range at 104,000, breaking through both the total cryptocurrency market cap $3 trillion resistance and the total altcoin market cap 840 billion resistance. We are going to be discussing what this means for the macro expectations for Bitcoin. We're going to be going over the recent 24 hours of price action, whether or not this aggressive rally will sustain, or if we are going to see a healthy correction. We'll also go over higher time frame targets, potential reversal targets, and everything you need to know about the short term and the macro charts. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure raw TA. If that is the kind of content you were interested in, you can also join us on Telegram. That is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. And if you're interested in taking your trading to the next level, you can join us in the VIP channel. To do that, click the pinned comment of the free channel, contact our admin by clicking this name, check out a 50+ month trading track record by clicking the first link, or check out a 10-minute video showing you inside the VIP channel by clicking that second link. You'll get access to our main trading channel where we post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more, including access to a variety of group chats from the general chat to the trading chat, education chat, to the daily video chat, the help chat, the news chat, and the group community setup chat. Check it all out, guys. We'll love to see you in there. Let's dive on in. So as we just said, a very big rally for the cryptocurrency market, for Bitcoin and altcoins alike. Now, we've been yapping on for the last week that a breakout of that $3 trillion level would be the trigger for an aggressive rally toward the upside, and we have seen just that. We saw the total cryptocurrency market cap climb up around $200 billion in market valuation over the course of around 24 hours. We also went on about how the breakout of 840 billion on the total altcoin market cap would result in a 15 to 30% rally across the board for the majority of altcoins. If we just take a very brief look at our watch list over here, we can see the majority of altcoins in the last 24 hours. Oh, the daily candle just opened. But if we look at any of these altcoins, for example, the majority of these altcoins in the last 24 hours saw 15 to 30% rallies. GOAT, for example, NEAR, for example, pretty much every single altcoin you can imagine. Theta saw these massive daily candles. So a big congratulations to everyone who was paying attention to that and followed through with what the technicals and the charts were suggesting. Let's start on our market data today. 24-hour volume and liquidations. Volume up 89%, pretty much expected there, with $388 billion in 24-hour liquidations. Pretty massive there. Volume, should I say, with liquidations up 338%. At just shy of $1 billion in liquidations, 968 million to be precise, 131 million coming from longs, a lot of those coming over the last 4 hours, and 836 million liquidations coming from shorts over the past 24 hours. Absolutely insane stuff. A very aggressive rally. One of the most aggressive rallies we have seen for quite some time for Bitcoin and the crypto market. Moving over, the DXY has jumped back up above 100, so we are potentially marking this as deviation here from the range low. Be very interesting to watch how this closes on the weekly. If we do close above 100, it is possible we rally back up to this 200 moving average. It does look like we are turning around here on the RSI, potentially exhausting in this downward pressure. Potential short-term mean reversion back toward the upside is likely. The S&P 500 not looking as great here as crypto. Crypto has seen a fantastic move upwards, where the S&P 500 is still lagging behind. It is still struggling to continue upwards. Again, for the S&P 500 to have a significant move up, like we saw Bitcoin, like we saw the rest of the crypto market, we need to break through this key level of resistance. Again, prior resistance becomes future support. Prior support becomes future resistance. So we are sitting at a key level of resistance here at around 5,700. If we are able to break through 5,700, you can see we've attempted this twice now, both failing to do so, we will likely see a move up to 5,800, potentially even closer to $6,000. But if we do not break through, if we fail to get through this region, we will likely see short-term corrections back to 5,500, maybe even 5,600 at 50 EMA, and worst case scenario, maybe even 5,400. Overall, we are still in an uptrend. Overall, the probabilities are still in favor of continuations, but if we're talking about when that next move upward would initiate, well, we need to break through this point of resistance to actually trigger that move to start. That is it for the broader markets, guys. Let's go ahead and jump into the analysis today for Bitcoin. We have a whole heap to discuss, so we'll jump right in. Now, before we do, if you're interested in supporting the content we make on a daily basis and supporting yourself in your trading journey, sign up to BitGet, BitUnix, or BingX with the exchange links down below. You get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume. Of course, you'll support me making the content, and you'll support yourself trading on an exchange I trust, I use on a daily basis, and get those exclusive bonuses. Check it out via the link down below. We'll play an ad and we'll jump back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and get right back into it. So first and foremost, let's start on the total cryptocurrency market cap and total altcoin market cap, and then move over to Bitcoin on the macro and the short term. So as we have been going on for the last week and a half, the most important chart we were watching for the next leg up for the market was the total cryptocurrency market cap. Now, the level we were watching was that $3 trillion level marked out by this horizontal ray, and that level built up to around about 3.08 trillion, which was represented by that VRPV gap. We were going on about how, provided we sustained above 2.8, which was this prior high or low, inevitably, we were going to be breaking through the $3 trillion level at some point, and when we did, we would see an aggressive continuation upwards for both Bitcoin and the altcoin market. We have since seen that move toward the upside, and the upward move has taken us just shy of that POC, sitting around 3.2 trillion. Now, we have actually now entered a new level of resistance. So the new level of resistance we have entered is going to be this POC level, which is sitting around 3.25 trillion, down into these daily wicks around that POC level prior to the aggressive breakdown, which is essentially the range high of this horizontal consolidation. If we want to draw it out, we had this horizontal consolidation over here. We had the breakdown, we had the retest, and then we had a continuation. So we're coming back up to retest the high of that prior horizontal, and that is sitting at 3.19 to 3.2 trillion. So the market, the cryptocurrency market, has completed a fantastic next leg up. We have completed that next leg up as a consequence of the 3 trillion on a break. We have now turned this area into an area of support, and we have reached the next high time frame level of resistance. So we want to see Bitcoin break through this weekly high. If we want to see Bitcoin essentially move to new all-time highs here, what we need to see now is we need to see the total cryptocurrency market now break through this 3.25. What we're particularly watching is going to be sustaining above 3.19 to 3.2 trillion on the total cryptocurrency market cap. If we are able to do this, it is likely we see continuations into new highs for Bitcoin and continuations into the next level of resistance at around 3.5 trillion on the total cryptocurrency market cap. Now, here's the thing. After we see aggressive continuations upwards, there is a chance for mean reversion. Now, mean reversion is not bearish, it is bullish. It would just be considered a healthy pullback after a large move toward the upside to facilitate the price finding demand again, establishing new higher lows before the trend continues. And that is what we're watching out for here now. So I'm not going to be aping into new positions. We've got a lot of altcoins longs that are profiting. We're not going to be aping into new positions here. We're going to be watching to see how this responds. If we see these short-term pullbacks, we watch for reversals again at that 3.09 to $3 trillion level. If we're looking at the macro over here for the total cryptocurrency market cap, the easiest way to put it would be we are now bullish above 3.09 to 3 trillion. If we lose 3.09 to 3 trillion, expect corrections back to 2.82. If we lose 2.82, we are bearish. If we break above 3.19 to 3.25, we go to new all-time highs for Bitcoin, and we see the aggressive rally we have seen for altcoins extend further into the future. Those are the key levels we're watching, and that is how we're using the total cryptocurrency market cap to, I guess, identify key trigger points where the entirety of the market will react to. That is the chart we're watching there. Moving over to the altcoin market, as you know, a lot of altcoins have performed exceptionally well in the last 24 hours. And as we have been discussing on this channel for now quite some time, that the breakout of the $840 billion resistance, which is essentially the most recent higher low within the overall macro downtrend, a breakout of that level would facilitate a 15 to 30% rally for the majority of the altcoins, with some altcoins performing much better, some altcoins performing on par with that expectation, and some altcoins performing a little bit worse than expectation. Of course, we have a variety of altcoins in the market. There are now thousands and thousands of altcoins, and money has to be distributed amongst all of these, and the money isn't distributed, number one, equally, and number two, the spread on a lot of the altcoins in these different pairs are widely different. So for some altcoins, lower amounts of capital moves the price more capital moves the price less, depending on the market capitalization. So we do see a variety in the returns on altcoins, but on average, we saw around 15 to 30% for the majority of those altcoins in the market, which is pretty much on par with our expectations. Now, the same goes for the altcoin market. We are in an uptrend. We are definitely bullish over here. Number one, we have got our uptrending diagonal trend line, which you can go ahead and draw in over here. And as we can see, the uptrending diagonal trend line is trending below the $840 billion level, which is a good thing, which means we have 2 points of confluence as high time frame support. We have not only got our prior higher low, but we've also got this diagonal uptrend and our prior lower high, which is going to be this point here, which is going to be the prior level of resistance, which is a current area of support. So provided we sustain around 840 billion, and most importantly, above this diagonal uptrend, the expectations are that we do see continuations upwards for the altcoin market, again, provided these levels sustain. If we drop below these levels, I would then be concerned for steeper corrections for altcoins, but until then, the altcoin market is posed for a potential move toward the upside. Where would targets potentially be? We are watching again this level. We're watching this $925 billion level. Again, the reason we're watching that is because prior historical support, look at all this support over here, and becomes future resistance, and that is still going to be an area of resistance. So we're watching that 925 level as potential macro targets if the market is able to continue, if the total altcoin market is able to push upwards, which we've facilitated by the total cryptocurrency market cap pushing more toward the upside. That is it for the context. That is it for these charts. Let's move over to the Bitcoin analysis now, starting on the higher time frame. So as we mentioned already, for Bitcoin to push into a new all-time high, it's pretty evident what needs to happen. We need to break and close now. We need to confirm the price has actually pushed past this weekly range high. If we take a look at the weekly range low, this is the weekly range low. Our weekly range high is this horizontal trend line. As I mentioned throughout the rest of the last few weeks, when we saw a break of the weekly range low, we saw a massive correction. When we saw a break of the weekly range low again, we saw a massive rally. So we've seen how this level has resulted in dramatic moves in the price action. But what we are seeing here now is that the price action is now retesting this weekly range high again. In prior instances, we have rejected from this on 1 count, 2 count, 3 counts, 4 counts, 5 counts, and 6 counts. We've had 6 weekly attempts to break through this region. None of these have actually sustained. Will we continue upwards through this time? I would say the probabilities are in favor of that doing so. Again, the whole premise of that comes back to the fact that the total cryptocurrency market cap here is bullish. It is not overextended. We are breaking through key levels of resistances. If we look at the Bitcoin chart again, if we look at the prior price action, going off what we saw historically, every single time we have had one of these macro momentum shifts after consolidation patterns. So for example, horizontal consolidation, macro momentum shift, price saw continuations upwards, okay? Horizontal, this was a descending channel formation, okay? So a slanted horizontal, a momentum shift occurred on the macro. We saw direct continuations upwards, okay? We had this overall downtrend moving into the 50 EMA and Gaussian channel upper band. We had a momentum shift on the weekly. Overall macro continuation resumes. Every single time the macro continuation has taken us past the highest point of the prior consolidation, which means if we were following what we have seen in the past, that would take us into at least push a weekly close into a new weekly all-time high. Something to consider. I do find it very, very interesting, and I would like to really drive this home, how powerful these momentum shifts are on the weekly. If you just trusted the momentum shifts alone, you would have had perfect entries and perfect reversal points for the majority of these upward swings. Again, a lot of people telling me, momentum's irrelevant, these trend lines mean nothing. I mean, everyone is free to believe what they want to believe. I'm definitely not here trying to tell people what they should do, what they should believe. I'm simply sharing how I analyze the charts and what I believe to be useful based on my trading experience over the last near 10 years as a now retired scalp trader. So these are just methods I use to identify discrepancies between what the buyers and sellers are doing and moments where the price action is generally in a position of which we may see reversals develop from. Now, in this particular instance, it has played out absolutely perfectly again. And if we look at what this would be projecting based on historical price action, it would be suggestive that we do have a good shot at breaking through these highs into a new all-time high. Now, at the moment, if we're looking at the biases of the trend, the overall trend is bullish. It has been so ever since we broke through, okay, this horizontal bear market resistance. This is the bear market resistance at 31,000. Okay, if we look at macro reversals, we saw a macro reversal occur on the falling wedge. That is when we initially entered Bitcoin. We've been bullish ever since over here in terms of the high time frame trend, but the bull market really started upon that $31,000 to $32,000 breakout around the 23rd of October. If we're looking at the trend from there, we have been above the 50 EMA and we have been above the Gaussian channel upper band ever since. So these points, the 50 EMA and the Gaussian channel upper band, as well as one more point, which is the baseline of the Ichimoku cloud, this orange line, sorry, I forgot the color, I forgot the name of color for a second, it's orange line, all acting as trigger points for the bear market to start. So provided we sustain above those, the trend is going to be assumed to be in an overall bullish trajectory. That is something we need to keep in mind. So where are the invalidations? Where are the key points that we're watching? Very simple put. Break above here, we obviously enter a new all-time high, and we know to break through here, we need to see the total cryptocurrency market cap break through its current resistance, which will facilitate the altcoin market cap continuing upwards, so we'll see a market-wide rally again if Bitcoin were to break through its resistance. Number two, if we were to see any sort of mean reversion or rejections, this is where it's going to develop from. So any sort of healthy pullback back into the range, this is where it is going to develop from, okay? It is harder to make assumptions that we are going to see rejections for Bitcoin if we break through here, as we have almost no historical price action data above 104.5k, okay? So if we're going to use historical data as a means to assume where we're going to see rejections, well then this would be the last realistic position where we could use that historical price action to make assumptions of where the price may reject from prior levels of liquidity. So if we're going to see mean reversion, if we're going to see short-term healthy pullbacks, it is likely going to develop from this point. How low can Bitcoin go while remaining healthy? Very simply put, 93,700, okay? If we sustain above 93,700, we are good. If we drop below 93,700, we go back to 89,000. And again, we've seen what happens when we break through 93,700 before. We see these large potential corrections, which may take us underneath the 50 EMA and the Gaussian channel upper band. Because by the time we see the move back to 89,000, if we see them move back to 89,000, it is very likely the Gaussian channel upper band and the 50 EMA will be crossing through, and therefore the loss of that level would also indicate a loss of a bull market uptrend in terms of technical levels, which could send us into a higher time frame downtrend. That is worst case scenario. Is that going to happen right now? Unlikely. Is it potential? It's possible, but it is very, very low on the probability spectrum, but we need to be aware of it just in case it happens, okay? Just in case that happens, but of course, we'll talk about that more if it starts to develop. At the moment, what we need to know and what I believe is happening is we've seen a fantastic rally into resistance. We're going to see the market pull back a little bit here on the short term. How much it will pull back, we'll discuss that in a second with the short-term analysis. But overall, if we are able to clear this level, that is going to be the trigger point for that next leg toward the upside. So if you're a level by level trader, taking profits here from your entries above 89,000 upon the breakout or above 93,000 is I would consider that a wise idea to do. Of course, you have to make your own decisions, and then looking for re-entries upon that trigger point, upon that next leg triggering. Let's take a look, guys, at the short term. So, you know, when you see price action like this, it's very hard as a new trader to not get FOMO. And this video is going to go a little longer today. Sorry about that. But I want to touch on this. It's very hard to not get FOMO as a new trader. You're looking at the price action go up. You're considering, oh, I can't believe it's gone up so much. I've missed this move. I've missed this move. I would like to remind people, and I'm not using this as an example to show you it's going to correct, but in these moves, we had people get FOMO, only for the price action to pull back, okay? In almost every single large move we have seen in the history of Bitcoin's price action, we see people get into states of immense FOMO, which results in making decisions they wouldn't normally make, only for them to forget about that move in a few weeks' time, and then be fixated on a whole entirely different move that occurs, okay? The market is ever moving and ever changing. You don't miss anything in trading when you sit on the sidelines. You don't miss anything. There is a downside and an upside risk to everything. The downside risk is maybe you run the risk of getting a later entry, but the upside risk is at least you don't lose any money. So there's always a downside, there's always a positive, there's always a glass half full kind of approach when you look at trading. It is only when you begin chasing the market and feel like you need to make moves based on what the market is doing, do you run the risk of actually making, you know, proper decisions which can negatively impact you. So in these instances, I get a lot of people questioning, why what should I do now? Market's gone up so much. The simple answer is, think about all the other times the market has gone up so much in the last year of how long you've been trading, and all the other times you felt FOMO, and all the other times the market has felt FOMO, only for it to then forget about that moment and then be fixated on another point in time later. So my point is, focus on the decisions you can make, not the decisions you should have made. Focus on what you can make in the future, refine your strategy to try and make better decisions again later, okay? Rather than focusing on what you should have done and what you could have done, because what you should have and could have done is irrelevant when it comes to trading. Also, I would also like to add that I should have done this or I could have done this is only good in hindsight. You only believe your decision not to enter was a good decision, sorry, was a bad decision after you've seen the price action go up. But at the time of which you made that decision, based on the information you had available and what you personally expected and your personal risk tolerance, you believed you were making it a good decision. So we don't base our decisions, we don't determine whether our decisions are good or bad based on the result of the decision. We determine whether our decisions are good and bad based on whether or not we're following through with our strategies, based on whether or not the decision we made at the time was a decision we believed in, was acceptable to our risk tolerance, we had exit plans, we had entry plans, and we were overall in control of our decisions, absent from emotion. And that is what determines whether or not your decision is good and bad, because when you extrapolate that over 1,000 trades, the person who was trading on emotions, regardless of whether they catch a 100% move here and there, their overall profit is likely going to be a negative, where the person not catching every move but trading based on their systems, although it might not make the most profit every single trade, will come out with a massive net return. And that is something I try to pride myself on as a trader, is about consistently winning over a long period of time to build up massive profits, instead of just having these boom and bust cycles where you make a hell of a lot of money in one day, and the next day you lose a hell of a lot of money up and down, okay? And that is why I've got to the point where I'm a retired trader now, over 10 years, having focused on consistency through these periods of time. So that is some advice I'd give. But let's get back into the short term. Again, mean reversion likely to develop. We can see already we're pushing up into this VRPV range over here. A little bit of mountain here in the VRPV, suggesting a point of resistance. Pullback targets, we are looking for 100,000. So again, prior levels of support become future. Prior levels of resistance become future levels of support. If we're going to see a pullback, we'd likely see to around 99.5 to 100,000, where then we would likely see a continuation upwards again. That is going to be our pullback target. If, of course, we do not get that pullback target, we are watching to see how we react to the weekly close above or at this level to determine our next moves. If we're looking at the overall trajectory of this trend, it is very hard to mark out because the trend has been quite interesting over here. But if we're looking at our moving averages, we are still sitting above that 200 moving average. We're still sitting above the 50 EMA on the 4 hourly, which is something to consider. And of course, if we look at the last hour of price action, we have really had this aggressive parabolic run toward the upside. We can watch something like our momentum, drawing diagonal trend lines on the RSI upwards to map out the overall trajectory of the momentum. Actually, we're going to be watching this trend line over here, which marks out again that bullish divergence here at the bottom, which is a point of reversal, taking from that point of reversal, tracking momentum from there. If we do see that RSI drop below here, that could mark out a more aggressive correction for Bitcoin back to 98,000. But until then, being more cautious, and I think the direction is more or less going to be short-term downwards, where the macro direction is very much looking bullish. Thank you for tuning in, guys. Sorry for the longer video today. There is so much to take a look at, and even this, 25 minutes, and I could still go on for another hour. Some people say I make long videos, but guys, I really believe that everything I talk about is super important. And at the end of the day, if I believe it's important, I'm going to be sharing it with you guys. Whether or not some people understand it is important or not, that is on them. Thanks for tuning in, guys. Have a fantastic day. Catch you guys next one on Sunday. I'll see you then.